Here's a review of everything going on in the markets and what to expect of everything that I usually show on this channel. If you guys want me to show something new, go ahead and comment it down below. But we're going to go over the dollar first, oil, interest rates, then your big indexes, and then gold and silver and some crypto. It's pretty simple. You guys can just skip around if you guys want or watch the whole thing. Up to you. Anyways, you guys are here on the dollar. This is the daily time frame. You guys are here breaking through resistance with a very strong candle. That means you guys have a whole bunch of movement to the upside, making sure that you guys have a high probability of hitting the next price target, which, if you guys zoom out a little, you probably see the next resistance show up right there at 101 and 76 cents. That is your next resistance. You guys also have this resistance up here. Now let me go ahead and draw out what to expect. So you guys may see something one of two ways. Well, technically three. But you guys go ahead, break down here, hit the line you just broke through, and then go straight up and hit the next line. Or you guys can go just straight up to the next line, or what you guys would probably like is if it just breaks through and comes all the way back down to the 200-day moving average down there. Because as your dollar goes up, your assets go down. That's just how the scale tips, and it is annoying. Anyways, let's go ahead and look at the oil now. So here's your oil in the daily time frame. You guys do have two gaps. There's one right here that I have marked out, and the other is right over here. Wonderful. Two very small gaps. You guys are above the 200-day moving average, and you guys have a high probability of just bouncing off of it and just going ahead and fill that gap up above first. Possibly hit resistance on your pattern again, and then come and fill the other gap. We'll have to see how this one plays out. To draw it out, for example, you guys would have to do this where it bounces up. You guys hit that zone, and then it comes down, breaks through, and fills the other zone. That is one way to play it. The other way of what it could do is just breaking straight through, filling this one, and then that would set you guys up for a beautiful swing trade, giving you a nice overextended oil and possibly shoot right back through the 200-day moving average and move up again. So, two ways for that to happen. But keep an eye out. You guys already know. Pay attention to your charts carefully and which direction everything is going. Overall, oil, just waiting for some type of movement. I'm thinking we're going to have that bounce, fill that gap, break through the 200 and go lower because this pattern is ginormous. As for your TLT, it's pretty flat. You guys can tell by the 200-day moving average being pretty flat at the top of the screen. You guys also have an inverted head and shoulders pattern it created. Broke to the upside, also a descending channel it broke to the upside of. And the head and shoulders has a price target of you're probably going to hit the 200. You're probably going to hit the 200, it seems like. And if you go off of the descending channel, you guys will probably see the 200-day moving average as well. See your break right here. Yeah. So two targets going straight to the 200-day moving average. That is what you will see, most likely. Now, after you meet the 200-day moving average like this, two things can happen. You break through, and then it comes down, hits it, and goes higher, which would cause your interest rates to go down because interest rates and bonds are inversely correlated. One goes up, the other one goes down, vice versa. It's pretty cool. And then you have the other way that this can play out, which is going up, hitting the 200-day moving average, and adios, you go down lower, which would cause interest rates to go higher as bonds dump. That's how that inverse correlation works. Pretty fun to play with, but there you go. Predictions for your bond market, the biggest market, if you didn't know. 2-year yield, a bunch of nothing going on. You guys are just going up in a rising wedge. Filled the price target of this pattern, so I can go ahead and get rid of that. And then you guys broke past this resistance, so I'll go ahead and get rid of that. And now you guys can see very clearly what is going on. Now you guys may also ask what the Fed is doing. They're just following this line here. That's the Fed. And then the 2-year yield is going up higher. Now your 2-year yield is in a bearish pattern, but that does not mean that it can't break to the upside. So you guys can go higher with this pattern. If it breaks to the upside, it's going to be pretty quick. And then if it breaks down out of it, then it goes pretty low. Overall, your price target, if you just take it from the middle, don't be greedy. You'll probably meet the 200-day moving average if you break down out of it. If you break up out of it, then you just fly to the moon. Pretty simple. And now you just have to wait for a break. That is all what you are waiting for on the 2-year yield, which the Fed follows. Now you're probably wondering why the Fed decided to hold interest rates. That's because it's not pulled away enough from the Fed to go ahead and rise interest rates. They have to keep some breathing room from where the 2-year yield is going. They don't want to be like exact on the point, because then if it flies in one direction, then it looks like, oh, the Fed's not in control. Anyways, enough of that. We're going to go ahead and move to the indexes after the 10-year yield that I forgot about. So here's your 10-year yield. Looks like you guys broke down out of that pattern. Wonderful. You guys also have a head and shoulders here. It looks like we can go ahead and draw that out for those of you that don't see it. If you guys trade for a while, it kind of just shows up immediately in your head. That is a very messy head and shoulders, so I'm probably going to delete that, but it's there. Anyways, you guys came up through this rising wedge, hit some resistance from back over there, wherever, and then broke down out of it, and now you guys are probably going to go ahead and meet up with the 200-day simple moving average. That is your price target from the pattern, and this does mean that your 10-year yield is very bullish. And what is the 10-year yield, you might ask? This is your mortgage interest rate. Pretty simple. Some other things too, but you just focus on the mortgage part because you guys probably own houses. If you don't, good, I guess. Have fun. Anyways, I don't know where I was going with that. You guys probably going to come down, hit the 200-day moving average. That is all. You guys also stuck inside of this very large pattern here. The Fed does not follow this, so I don't need it mirrored. But you guys are in this very large pattern. Did peek out of it a little bit. False breakout. Overall, probably just going to keep bouncing in it. We'll have to see a clean break out of it to be like, yes, we are going in this direction. For now, still stuck in it. Now I'm going to make this really simple because all 3 indexes, or 4 depending who you are doing basically the same thing. The Dow Jones is doing something slightly different. This pattern played out basically immediately, so it's pretty useless. But if you guys squint your eyes and stare at the chart, you guys will see a head and shoulders pattern. Very sloppy, not the most beautiful, but it is there. And if you guys break down out of that, then that is just heading back down to the 200-day simple moving average. Very simple play. You guys are very overextended on the indexes because all of them are doing this. No need to show all of them. And you guys do have gaps that it's going to want to fill, which is like down over here. And then over here, filled that one. Not really one in there. Basically just this giant one down here. And if you guys don't remember or you guys haven't watched it yet, I do have a video somewhere in the archive of me saying if this runs in one direction for about 20% or so, usually you give it all back and some extra change because that's just how the market is. It doesn't like being overextended. You guys can measure your move out here. Cool, I can't see it. Oh, would you look at that? 20% or 21%, depending on who you are. And that means you guys are pretty overextended and it will probably want to give it all back. So watch out there in the markets if you're trading it like an investor. If you're a trader, have fun. Try not to short above the 200-day simple moving average. Just wait for it to break down, and that would be beautiful. Other than that, you guys can see you're pretty bearish on all your indexes. And that is what you can look forward to in the coming months, because these do take a while to play out. Let's go ahead and jump into some crypto now. This is Bitcoin. You guys are in another pattern. I loves making these all day long. I'll go ahead and draw that out for you. You guys have that, which is exactly what we broke out of. Twice. Yeah, twice. 1, 2. Oh, look, another one. 3. And Bitcoin, it's just in a slow fall. It's crypto winter. It's turning around, having fun. And this is because it's inversely correlated to the dollar. When your dollar gains value, your assets usually fall. Can't remember if houses do the same thing. Pretty sure they do. But your gold, silver, crypto, pretty sure your houses as well. You guys got to double check that. Take what I say with a grain of salt, by the way. And as assets go down, dollar goes up. As I haven't said that like 5 times in a row because you keep forgetting what I'm saying. Anyways, you guys want to see a breakdown out of this pattern. Most likely it's a continuation pattern. Probably going to come down, hit this price target. Or if you guys want, you guys can draw a new one, which would be right about here. And then you go ahead and move it down. And oh, would you look at that? It's about the same. Yay. And then that would also fill the giant pattern that's way back here, which is a giant head and shoulders pattern. It's just patterns, if you guys haven't noticed. And we jump over to XRP. Same thing. Guys have that rising wedge or bear flag or whatever flag. It's just lines. And then you guys can just break down out of that. Looks very beautiful. Yay. My XRP is going down. Just kidding. I don't buy it. Trade it. Anyways, about the same price target here. I do have a giant price target for XRP. Bottom is 18 cents. So if you guys like buying and holding XRP, good luck. Hopefully you guys have some stress management, or maybe you like red light therapy. To have fun. Now your gold, this is your asset class now. Well, your physical, well, this isn't really the physical. This is like the denomination of the physical, because you can't make more of the physical because there's a limited amount, but this one you can make in infinite amount. It's weird. Different conversation. Anyways, this is not your physical gold. This is just a gold tradable symbol. The ETF is what you would call it. And as you guys can see, broke down out of the pattern. You're going to go ahead and head lower, probably hit 344 and 76 cents. Absolutely beautiful. You guys do have some resistance right there. And that's about it. After that, you guys have a very large run to the left, another large run in the middle of the chart, and then you're probably going to give that all back. Overall, pretty bearish on gold. We'll go look at silver real quick. It's basically the same thing. Here's your silver. Same thing. Giant pattern. Broke down out of it. Wonderful. You guys are probably going to hit some resistance right in there. And then, if you break through that, then you hit the full price target. Now, if you guys have followed this channel long enough, you guys see that most of the time my price targets hit whenever I say them. But it does take a while. That's why you guys get only 3 videos a week. And then you guys get my day trading videos and the shorts almost every day because I do that. Anyways, if you guys have something you guys want me to look at, go ahead and comment that down below. And hopefully you guys have a wonderful weekend. And I will see you guys again Monday.